The silver and gold price are being pushed around in a tight range for the last several weeks. But what's going on a worldwide basis? What's going on domestically in the United States? Huge news stories which over the long term will affect the price of silver and gold and affect it in a very positive manner for us basement dwellers. Look, I woke up this morning, I looked at the price of gold, down $23 an ounce. I looked like literally 5 minutes later, and it was only down $10 an ounce. The price of silver, the price of gold are pushed around and manipulated. I just had a great conversation with Jim Forsyth from Citizens for Sound Money. He's one of the smartest guys in the room, okay? You can look him up and read about his credentials. Super smart guy, super nice guy. He's a patriot, I would call him, for silver and gold legal tender legislation. But he talked about some report that had been out in the past that talked about how, I hate to say this, but essentially there's a possibility that they do manipulate the price of gold in particular, make it more volatile to frustrate us. And you know what? You ever get the feeling it's working? That's working, Joe. You have frustrated a lot of silver and gold investors over the years, but we will keep our faith. Listen to this. I found this very interesting. This was as of like 20 minutes ago. I went and looked at the gold price. The difference between the futures price for gold and silver, the gold futures price was only down $6 per ounce at the time of my note taking. The spot price, and that's the futures price for February 27th, but the spot price, the current price, was down $20, like 3 times more. Silver, same thing. The futures price for March 26th, right? Almost 2 months out, only down 15 cents per ounce. The spot price was down 32 cents per ounce. They are monkeying around with the precious metals prices, but let's talk about the big picture. Then we'll zoom back in on some particulars for you about silver and gold. What's going on in the world right now? The 10-year bond yield was pushing up around 4% again, right? Bond yield, the dollar. What did it say? So the dollar rose to a 1-month high, and we know what that means. That strong dollar. And we're going to talk about how strong the dollar is in a little bit, but it's at a 1-month high, and the 10-year yield pushed up above 4%. We all know that consumers, corporations, and our government, who only has $34 trillion in debt, can totally deal with these higher interest rates, right? They're going to have no problem. Yeah, right. Are you kidding me? Higher interest rates are suffocating the economy. It can't go too much higher. The S&P 500 was down, blah, blah, blah. The big thing going on in the world. Big deal. Big deal. We still have the Houthis doing attacks in the Red Sea. As a matter of fact, Shell Oil Company, right, one of the biggest in the world, has suspended all ships going through the Red Sea. And something like 12 or 13% of the world's oil goes through the Red Sea. We know the Panama Canal apparently is all dried up because of drought conditions. Guys, this is going to have major impacts on the world economy, on inflation, on the price of silver and gold. And we got even more news. It just keeps coming. Sit down. Make sure you got a full cup of coffee. Thank you for being here. Don't forget, that's my beautiful thumb. Press that thumbs up. That helps get the word out to more people. But we got some news from the New York Fed this morning about the U.S. economy that is downright frightening. Now, I'll let you decide for yourself, right? You're big girls and big boys, big women, big men, whatever we want to call ourselves. You can decide for yourself. However, big bad news out of the New York Fed. But first, the other major story, and this is the sleeper. Nobody's talking about it. Not very many people, but this is the big sleeper story of 2024. All right. Donald Trump, Iowa voters delivered Donald Trump a victory, a landslide victory in Monday's caucuses. Okay. This is and this is not a political show. I'm not commenting pro or con. I just report the facts. Donald Trump won the Iowa caucus by a landslide, was the headline that I read. And that's making the liberals freak out. Apparently, what's her name? Michelle Maddox went on a tirade on whatever channel she's on, MSNBC. I don't know. I don't really watch mainstream media. From an analysis, from a risk assessment perspective, which is what we're interested in, guys. The fact that it's a bomb almost. It's a scary situation right now, socially and politically in this country. They are at the most extreme, crazy levels, which could lead to like serious turmoil. With elections, with social issues, uncertainty. Scary situations. We got extreme levels of conservatism and liberalism, and it's just something that we need to keep an eye on. On top of that, we know it's an election year, which means that, typically speaking, we already know. I have a question for you. I have a question for you, but we're going to ask this question in tandem to our president, Joe Biden, because we are going to watch what happens this year. I got a feeling there's going to be some surprises for you, okay? New programs, new promises. Do politicians ever make promises? Promises of new programs. Things that are going to make you feel warm and fuzzy. You're going to get some free money promised to you. You're going to get the moon and the stars, right? Because that's what politicians do when they're in office and they want to get reelected. That whether it's a Republican or a Democrat, they may have some nuances between what they do, but nonetheless, you're going to get some big promises. Things like, we're going to take away your student loans. We're going to pay off part of your credit card debt. We're going to give you mortgage assistance. We have a new program. So be prepared. But I just have one question. Remember, we had a question. We have a question for Joe Biden, President Joe Biden, because I have a question. If it's working, if Bidenomics is really working right now, then why are you going to, and we'll see if I'm right, but I know I'm right about this one. Why are you going to come out with a bunch of BS programs to promise everybody a bunch of stuff if Bidenomics is already working? Does that make sense? Anyway, that will do nothing but cause further dilution of the U.S. dollar. It'll be money printing in disguise. It'll be whatever you want to call it, and it will be good for the price of silver and gold. So hold on to your hats, boys and girls. And don't forget the situation in the Middle East. That's the other big factor right now. I can't believe that we're not calling the situation in Ukraine a big deal right now. That's kind of been pushed off to the back burner, right? Excuse me. The other big deal is what's going on in the Middle East. And the Houthis, I read it this morning. These people are used to being at war. They are used to fighting, right? And doing kind of guerrilla-ish type warfare. So that situation continues to be a major powder keg where we have the Houthis. We're basically, I don't want to say at war, in conflict with Iran. That's what's going on. It's a big, big deal. Oh, we're also in conflict or war by proxy with Russia. Don't forget that one as well. And we have what's going on in China. The world is just a wonderful, peaceful place. No, it's not. It's scary and it's a big deal, and the world is moving to gold. I won't go down that path, and silver, but nonetheless, we got to keep an eye on these major big developments. Something else very interesting about what's going on in the Red Sea. They're pointing out that like these American Western warships, the Houthis are launching $10,000 or $20,000 drone bombs, whatever they are, and we're using missiles to shoot them down that cost like $1.2 million each. Like they're draining, like we needed more draining of the United States coffers to go on. My gosh, I don't know. Anyway, I won't go down that path any farther because the dollar is so strong. Remember what we talked about earlier in this live stream? The dollar is doing so great. That great dollar, right? Remember, in 1964, if you had 4 silver quarters, there was silver in your money back then. Yes, right? You had 1964, you had 4 silver quarters. You had 0.715 ounces of silver. That would buy you 3 ounces of gasoline. They then took silver out of your money, right? The dollar, they made it paper, right? They made quarters out of copper and nickel. They took that silver away. If you'd held on to that silver, right? If you put those 4 silver quarters, imagine just sticking them down in your pocket and held them through today, those 4 silver quarters would buy you like 6 or 7 gallons of gasoline today. Twice of what they would have bought you in 1964 if you made the foolish decision to say, I want to get some of those new quarters. They're shiny and pretty, and they don't weigh as much. They're not weighing me down. When I get on the scale, I weigh less. These copper and nickel quarters, if you'd converted the copper and nickel quarters, and today you had those, they're worth $1, and they will get you about 1/3 of a gallon of gasoline. So the dollar being strong. I want you to think about this. Since 1971, hold on, let me pull this up. Oh, we got to talk. Oh, man, we got a lot to cover, guys. Hold on here. Here we go. Wait a minute. Here it is. This came from Silvercrest Metals. The U.S. dollar, okay, is the world's best performing fiat currency. Congratulations. We have the best performing. Winner, winner, chicken dinner. The U.S. dollar, number one, America, right? Yeah. Number one performing fiat currency over the last 50 years. Yet, well, there's a little caveat, a little but, and we like big butts. We will not lie. Hi, Susie. Okay, let me start that over. The U.S. dollar is the number one performing fiat currency in the world over the last 50 years, yada, yada, boo-boo, fireworks. Yet, it lost 98% of its purchasing power. I'd say that's a big but relative to gold. So over the last 50 years, the dollar's numero uno, but when you compare it to gold, it's lost 98% of its value. Mic drop. I can't drop this mic. It's there, but it's crazy. Absolutely crazy. Look at silver if you want. Look at gold, okay? But don't forget, there's a big but. Where'd I go? Bear with me. We're having some problems here this morning. Maybe I'm not made for live streaming. I don't know. Anyway, let's see. Oh, yeah. But there's another big but, and we like big buts. We will not lie. There's another big but when we talk about that dollar losing 98% of its value over the last 50 years. And I'll argue this to the bone, right? It did that after President Nixon temporarily took the United States off the gold standard so that he could print money to pay for the Vietnam War and try to get himself reelected, but he got impeached. Nonetheless, during that 50 years, right, where the dollar lost 98% of its value, this is serious. Think about it. The United States was ruling the world. It doesn't feel like the next 50 years is going to be that way. Basement dwellers, do you think, right? Like the dollar lost 98% of its value, and it did it during the best of times with the help and the tailwind of being the world hegemony power. I think I pronounced that right for once. Hegemony. I think I can say it now. Hegemony. While we were ruling the world on many levels, financially, militarily, our currency lost 98% of its value. Where are we sitting now? Because the last couple of years, a few things changed. We know we got Bidenomics and it's working, but the reality is we're heading into decades, years ahead, where we are experiencing change like you and I have never experienced in our entire lives, the entirety of our lives. But the economy is strong. We're going to talk about what we have to be happy about because the economy is great. Give me 1 second. I'm going to have a quick drink of coffee. I'll be right back. Thank you guys for the thumbs up. Hey, don't forget, it's a big deal to me. It's a big deal to all of us basement dwellers, each and every one of us, that you are here today. We want you to come back. You're always welcome here. It's a big honor that you're here. We'd love to hear from you. You need to subscribe to the channel, or we would be really appreciated if you subscribe to the channel. That way you can leave comments and we can learn from you, because guess what? You're smart, you've got a good head on your shoulder, and we want to hear from you. So please consider subscribing to the channel. I'll be right back with some crazy economic news. Okay, I'm back. CoinShop Chris just threw a virtual ding dong at me that I can see on my screen. This big ding dong saying, "Hey, Ronnie, ring the bell. People hate when you ring that bell." Here, I got this bell. I ring it 10 times. One time for each 10 thumbs up. We got 100 thumbs up. That means 10 rings of the bell. That's enough warning for users that don't like the bell. Here it comes. Thank you. Okay. What's the big news? The big economic news of the day. Sit down. Oh, hey, thank you. Charity Jane 31. I forgot about super chats. Those are super appreciated. Thank you. Thank you. Goes a long way here to keep Ron's Basement alive. Hey, before I do that, let's say thank you to our sponsor, Pimbex, Pimbex, Pimbex.com, online bullion dealer. If you want competitive, ultra competitive prices, if you want a company you can trust, if you want silver, gold, platinum, yes, they have it all, a great selection. Check out Pimbex next time you're shopping for bullion online. I did it myself, probably over a year ago before they sponsored the channel. I love Pimbex. I sent them an email. I said, "Hey guys, if you ever want to sponsor a channel, please let me know because I have had a great experience with your company." And you know what? I get those same emails now from you, from Ron's Basement Dwellers, that check out Pimbex for yourself. Do your own due diligence. I get emails saying, "Thank you, Ron. I've had a great experience with Pimbex." Pimbex, Pimbex.com, where you get more metal for your money. And like if you're buying, look, shop around, do your own work. But whenever you're buying bullion, let's say you're going to buy a 100-ounce bar of silver, okay? Big money man or woman, either way, basement dwellers, ladies and fellers, you're going to buy a 100-ounce bar and it's the same bar. Let's say it's a Royal Canadian Mint bar, and one place has it for $2,900 and another place has it for $2,600. It's the same bar, and the place that has it for a lower price you trust, I would think it'd be smart to buy it from the place with the lower price. And then you can get yourself an extra 8 ounces of silver rounds, whatever. You can go, I don't know, do whatever you want with that extra money. I personally would buy the extra silver. Then it would show up, the 100-ounce bar and the extra 10 or 8 ounces, and be like, "Hey, that's cool. I got basically free silver." Anyway, I digress. What's going on in the economy right now? Is it that bad? Is it that scary? Right? A lot of the country's frozen in a polar vortex or something like that. But is my voice leaving me? Hold on. Okay, I'm back. Is the country freezing? Is the economy freezing? We get some news here from the New York Fed. All right. The Empire Fed. Sorry, guys, I'm losing my voice. The Empire Fed Manufacturing Survey suffers its biggest 2-month collapse outside of C19 in history. So outside of C19, we've never had it this bad. Well, no one saw, this is from Zero Hedge, no one saw that coming. The New York Feds, and this is from the Fed, so they like to, let's say, paint the prettiest picture, okay? And you know what happens when the economy collapses? The Fed has to print, and that makes the value of your silver and gold in real terms go up and up and up. Nonetheless, it's going up right now. I don't care. Think about your silver and gold in terms of ounces. All right. Think about the mining stocks that you own in terms of ounces they have in the ground. It's going up and up and up. Don't think about it, especially on a day like today when it's down. Don't think about it in terms of dollars. Think about it in terms of ounces. I'll do my best to do that as well. I know it's very difficult for us to think outside of the constraints of dollars per ounce. Anyhow, the New York Fed Empire State Manufacturing Survey for January crashed from negative 14.5, that was bad enough, to negative 43.7, the worst print in the survey's history outside of the C-19 lockdowns. Page 2. I'll show you quickly. Again, this came from Zero Hedge. There's a chart, okay, that shows how horrific of a decline we had. That circle. The negative 43.7 print was a stunning 10 standard deviations below expectations of a bounce to negative 5. They were expecting negative 5. The print itself was negative 43.7. Under the hood, basement dwellers, we like to dig in. This is one quick little paragraph, okay, just to get an idea of what's going on with this information that we got from the Federal Reserve. Under the hood, it was a bloodbath. New orders slumped more than 38 points to minus 49.4. The weakest since April of 2020, while shipments dropped the most since August. Worse still, the index of prices paid for materials, this is critical, increased to a 3-month high. So we have a stagnating, you know where I'm going with this, basement dwellers? We have a stagnating, declining economy, but, and I like big buts, I will not lie, and I will not say that again during this live stream. It's lost its shelf life of being funny. I apologize. The economy's slowing, right? Orders, activity, but prices paid for materials increased. Stagnating economy, increasing prices, the S word, stagflation. Have we talked about that already? Stagflation will be the most conducive environment for the price, the most fertile soil for the price of precious metals that you could ever imagine. Now I lost my notes. Let's get back here, okay? You know what happens, right? Fiat currencies, this dollar that we're measuring everything in, are mediums of exchange, not stores of value like silver and gold. Fiat currencies, paper money. We know what happened in Venezuela. We haven't talked about the V word for a while. Venezuela, the price per ounce of silver just this year, is up 75%. But that's nothing, because we've got one of our favorite quick charts to look at. This is the price of silver in Venezuelan bolivar during a 4-month period in late 2018, where it went from 36 all the way almost to 10,000. Okay? Look, the reality is the United States is subject to the same laws of mathematics as any other country in the world. Turkey, Argentina, Venezuela, you name them, Lebanon, any of these places that have had hyperinflation. People, your neighbors, right? Maybe your mommy and your daddy, maybe your kids, maybe your brothers and sisters, maybe your neighbors, maybe your fellow churchgoers. You know a lot of people. I know that, okay? They're going to wake up. They're going to wake up when they go to the grocery store and a gallon of milk costs $11.28. Not a penny sooner. That's the key number. What I mean is, this next wave of inflation that's heading our way. Remember what the Empire Fed said. Oh, the business is contracting, but prices are going up, up, up. Powder keg in the Middle East. So many factors are in place that could easily $34 trillion in debt, $2 trillion deficit. The next wave of inflation, I don't have a crystal ball, but it feels inevitable. I can't tell you it's going to happen next month. I can't say it's going to happen in May. But I will tell you with 100% certainty, barring some miracle, right? There's a 99% chance we are going to see more inflation. We are going to see the US dollar continue to go down in value, right? We are going to see dilution of the currency. Calculators don't lie. Okay, thank you, Shadow Work, for the super chat, my friend. I appreciate that. Calculators do not lie. It's coming, okay? Here, let's read this. This tells us, here it is right here. Currencies. Currencies with infinite supply growth do not maintain their purchasing power. I mean, isn't that like common sense? Currencies with infinite supply growth cannot maintain their buying power. Can we experience that? What did we talk about earlier during this live stream? We talked about the fact that over the last 50 years, compared to gold, the US dollar has lost 98% of its value. Thank you, Metal Seer. The right way to deal with the BRICS, though, is not to try to swat that down, but increase the value proposition of the dollar itself by pegging the dollar to hard commodities. That's interesting. That's from, I think he dropped out of the race, Vivek Ramaswamy. I love that comment, Metal Seer, because you know what? I think it's inevitable, right? And that's what this super smart person, and you'll be able to watch this interview. It's a long interview. This guy is a brain, very smart guy, very smart. Okay, Jim Forsyth. Anyway, you got to listen to what he says. It's inevitable. He feels it's inevitable that we go back to a silver and gold backed currency. What you're talking about, Metal Seer, I think it's inevitable. I think as the BRICS grow, how's that sound? As the BRICS grow, more bricks are put in the wall, however you want to say it. We could be forced. They could indirectly force us back onto a gold standard, force us back into a system where the dollar is linked to commodities. All right, it's you gotta really open your mind to see that playing out. Silver and gold have not gone anywhere. All right, I'll argue. You guys don't agree with me. I know you're going to throw tomatoes at me, but I'll argue the fact that we could put forth a case that the silver and gold standard never really went away, right? Never really went away. Gold did not go away. Think about it. When they took the United States off the gold standard in 1971, then gold had one of its best decades ever. Same with silver. I mean, it went up multiple times. So you're going to tell me that gold and silver haven't maintained their stoic position as the base of all money, the bottom of Exter's pyramid? You know, the deep current? Sure, up on the surface, things get wavy. I know. But no, silver and gold have maintained their position and will maintain their position. That's what I think. Look, I could be dead wrong. Let's say thank you to channel sponsor Fortuna Silver Mines. They're a company pulling silver and gold out of the ground. They're a worldwide, global company, very responsible. One of the things that always struck me about their CEO, Jorge Ganoza, when I would talk to him, is his appreciation and admiration for the team, for the employees that are doing all the work all over the world and the communities in which they operate. Jorge is, in my opinion, one of the best CEOs in the precious metals mining sector. If you want to learn more about Fortuna Silver, it's a stock I've owned for a long time. I'm not giving financial advice, but if you want to learn about a worldwide silver and gold producer that's doing it right, go check out fortunasilver.com. Are we at the end of the tightening cycle with the Fed? Are we at the end? There's something else going on too, guys, called quantitative tightening, right? The Fed, selling off all these bonds they got. Quantitative, not a good thing for the silver and gold price. Let's just see quickly. Bear with me. Is the Fed going to move to quantitative easing, QE, right? That we know. We've been programmed, but we know mathematically as well is a very good thing for the value, quote unquote, or price of silver and gold measured in US dollars. We had an article here that says it's all over, quote, Powell's Wall Street Journal mouthpiece and JP Morgan confirm the imminent end of QT. The end of QT is the same as QE, okay? But let's read this quickly. On December 13th, remember that day, the financial world was stunned when just 2 weeks after Jerome Powell had said it was premature to speculate on rate cuts, he did a U-turn, right? Shocking U-turn and pivoted dovishly, ending the Fed's hiking cycle with inflation still running high. Right? Inflation is still running high above the target of 2% and said that it had, in fact, discussed the start of rate cuts, contrary to what Powell had said just 2 weeks early. Not that Jerome Powell would ever contradict himself. Right? We know 2.5 years ago, Jerome Powell said he wasn't going to raise rates until the end of 2023, which would mean that we would just now be starting to see higher rates. And they just wrapped up one of the most aggressive interest rate hike cycles in the history of the entire universe. So Jerome Powell has a little history of contradicting himself. But our friend Janet Yellen, we can always rely on her to be a beacon of truth and accuracy. Nonetheless, I digress. Okay. The financial world that had not read this, blah, blah, blah. Let's read. We want to read about what Nick Timiraos said. Where'd it go? Funding, Fed capitulated. Okay, well, basically, I can give you this. This is my job. Okay, if that wasn't enough, Nicky Leaks. Nick Timiraos is a writer for the Wall Street Journal who supposedly has like the inside information. All right, so here, Nicky Leaks, they call him, also confirms our suspicion about the driver behind QT runoff. The financial plumbing is starting to clog up. All right, then they go into this whole big technical, and this is what you need to know. Okay, they have created such a complex, hard to understand series of systems. The BTFP, the Bank Term Funding Program, the repo market, the reverse repo market, quantitative tightening, a whole host of very complex little duct tape type systems to keep the system running. At the end of the day, have you noticed something? And that is that what keeps on happening with the system is new issues bubble to the surface. Right? Rust appears on the side of the car. And what does the Fed do? They come by with a can of spray paint and they just spray paint over the rust. It looks good for a month or two, and then the rust bubbles back to the surface. That's what we're dealing with as we're listening to what the Fed is doing. At the end of the day, the Fed is going to have no other option but to print more money. Right, to deal with a situation that is very close to becoming I'm going to say cataclysmic, but a spiral, right? A spiral that some people say could lead to a vast devaluation of the U.S. dollar. Again, remember what we talked about earlier. Look, we aren't immune. The United States has to deal with the same laws of mathematics, interest, okay, multiplication, division, addition, and subtraction. We aren't immune. And so the Fed can create these very confusing. I understand, right? Like I have a financial background. If I really dig in, I can get it, I can understand it, but these are not natural things that they are doing. These are unnatural things that they're doing to keep this fiat paper unicorn fart dust. We haven't said that in a long time. System alive. That's what they're doing. It's unnatural. It doesn't make sense, right? You may be confused, like what's a repo? What's the repo market? What's the reverse repo market? What's the BTFP program? What's quantitative easing? What's quantitative tightening? It's all a bunch of rigmarole meant to confuse us, right? Most Americans have no clue, right? I don't know. At your next family gathering, ask your Uncle Ralph what he thinks about the BTFP program, right? And he'll say, huh? You know, whatever, right? It's all unnatural. Now, I want you to think about this, because this is why we do what we do as basement dwellers, as gold and silver enthusiasts. And you're not just right now you're a basement dweller, and I appreciate you being here. Don't forget, please give this a thumbs up. I'd really like us to hit our 200 thumbs up threshold so we can ring the cowbell. Jake likes it. A lot of you guys like it. Thank you for being here, and also subscribe to the channel. Now think about why We own silver. Why we own gold. All these things are unnatural that the Fed's doing. What is natural? Right? God's money, some of us refer to it as, right? The planet's money, silver and gold are natural. You know, and I've had this discussion. It's becoming very interesting to think about this fact that when we're on the silver and gold standard, and I know it feels bizarre to us because most of us have only really been adults or alive during the era when we weren't on the silver and gold standard. But if you broaden, if you're willing to open up and look at the last 200 years, the last 3, 5,000 years, whatever time frame you want to look at, when silver and gold are the base of money, right, there's a couple things that happen. They're generally very prosperous times. That's when people grow, when civilizations grow, right, when great strides are made. Average people, maybe you're like me. I consider myself average. You're exceptional. Don't get me wrong. There's only one you. You're unique. You're special. Your mommy loves you. I love you. You're always welcome here in the basement, but we're more general. I, consider myself an average person of the world even. Most people around the world are average, nice, good people. They benefit because they can store value in real money. They're not subjected to this hocus pocus math that takes away their money. The other thing that happens is it's generally a much more peaceful period of time in the world when the world uses gold and silver as money because the power elites, they're tethered to gold and silver. They can't just print money to fund these expeditions of war and violence against other countries. So remember that as we think about the facts surrounding silver and gold as real money. I know, I get it, guys. I know it's hard. We've lived in a fantasy world, most of us, right? I mean, even if you're 70 years old, you were 20, you probably didn't really care. Like most of our adult lives have been during this silver and gold. This is not some new concept that we're talking about. It's a repeated pattern over history. It's happened before. It can happen again, and it can actually happen with great benefit for the people of the world. Hey, I want to say thank you for joining us today here in. Oh, wait a minute! Whoa, 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 whoa! Let's get 9 more thumbs up. 8 more thumbs up. Don't leave, guys. Please don't leave. I promise I won't sing. I promise I won't say the word silver or gold anymore. Oh, wait a minute. That's going to be a hard one. All right. Here. 300 thumbs up, 200 thumbs up. We're going to ring the bell. Do you prefer to store your store of value? I want you to think about this. To be in an instrument with infinite potential supply growth or in an instrument with a finite limited supply growth. Let's look at these statistics. Again, this comes from, I think it's Endeavor Silvercrest Metals. I apologize. Okay. The US dollar, the United States dollar, and the British pound sterling have had a 9% annual supply growth rate from 1960 through 2015. The top 167 currencies of the world, fiat currencies, had an annual 32% supply growth during that same period, 1960 to 2015. What about the Chinese yuan? We haven't talked about the Chinese yet, okay? They've had an 800% currency supply growth just from 2007 through 2021. But what about gold? Gold has a 1.6% annual supply growth rate. That was from 2000 to 2022, 22 years. Silver, a little higher, 1.8%. But what's interesting about silver? Our old friend silver. Oh, yeah, that's right. Silver gets consumed. Thank you, Metal Seer. Thank you. Hopefully, President Trump will name Vivek Ramaswamy as chairman of the Fed, or that could be interesting. We need some conservative real money people to get into positions of authority within our country. It could be interesting. Again, I'm not a political show. I don't take sides, but I would say that would be a very interesting prospect. Guys, we got the 200 thumbs up. Let's ring the bell. 200 thumbs up. Bell warning. And we'll do one more for Jake. All right, guys. Thanks for being here. We got a lot going on in the world, globally, in the United States, even in our local communities that we need to stay abreast of. I know you protect yourself with silver and gold because you know that mathematics show no forgiveness on the altar of truth. On behalf of myself and Susie, thank you for being here, and I'll see you tomorrow.